Let's go over how I find a daily bias when I am looking to trade. So the first thing I look to do is actually jump onto the weekly time frame. And the reason why I look on the weekly time frame is because I want to see where price is going in the longer term and what the macro trend is. As you can see, from 2021 to around 2022, about mid 2022, we've had this move to the downside that is very long, and it's just been continuously moving down. Now, this is where fundamental news comes into play, because at the end of the day, the market does respect fundamental activity, and so this is what's being factored in by this price movement to the downside. And so we know that around this point in time, we were given the hint that price was going to continue to move to the downside because of interest rate hikes, and so this caused currency pairs like euro, dollar to move to the downside. And so we had this move to the downside, and then at this point here, we actually got the understanding, or we were able to assume from the Federal Reserve, that price would actually move to the upside because there was an understanding that rate hikes would be slowed down, or we could actually even get some rate cuts going into 2023. And so that's why we got this push away from price as well. We can also see we came to the key level of 1. That price obviously didn't really want to be below and wanted to be above, and so that was a good factor as well. So now that we understand where price is on the weekly time frame, we only really need to know about this section here, because we like to zoom in. We don't need to know about what price was doing around here. We want to zoom in a bit, and so this is what I'm going to be looking at more carefully. So now let's drop down to the daily time frame, and this is where structure comes into play for me. So the first thing I'm going to do is I'm going to start drawing out structure to see where price is going. So I'll start from any point, but I'll start from around here. For this video, we'll be using Trader Edge, which is a backtesting and journaling software that allows you to track key metrics about your strategy and how you trade. It's very simple to use, and they currently have a 7-day free trial, so go check them out. I will be using this software personally for future backtesting and journaling. Link is in the description below. So we have this high, this lower low, lower high, lower low, lower high, lower low, lower high, and lower low. And as you can see, from this point we start to get a shift in trend. So if I just change the color to, let's go with sky blue, we get higher low, higher high, higher low, and then we get a higher high, but we haven't got that higher low yet, so I can't really plot that on. So we can see that we've had this shift in trend. Now this is really important because it gives us an idea that we have a structure that we can follow to give us an indication of whether to take buys and sells in terms of our daily bias. So now we can also draw on that we've had this break of structure just here, and so our bias is now on the daily time frame in the medium term to the upside. So now that we have structure drawn on very nicely, we also know that price is reversing to the upside. It's time to start drawing on our next thing that I always look for, which is zones. So what I like to do is I like to look where price is at the moment, and I like to draw 2 zones above and 2 zones below price. So let's start off with that. We have this zone here, which we are currently actually reacting to, which is a good zone to highlight. And then we have this zone just above with this candle here, and there's my 2 zones. And then once price reacts to one or invalidates one, I will move on and draw another one, but I don't have to do that for a while. So let's draw on the next one to the downside. Let's see what we got here. So we have a zone here with this red candle, so I'll draw that one on, and then we have a zone right at the bottom here at the extreme. And now as you can see very clearly that with our structure and the structure we have to the upside, we are expecting a pullback to the downside, and now we have a zone drawn out. So now we can see the confluences of a potential daily bias to the downside with expectation of a move to the downside coming into play. And we've only drawn on 2 confluences or factors, you can say, in terms of what I look for when creating my daily bias. So now let's see what we can use next. So now that we've done all the zones, the next thing I actually look for is imbalance, because for me, having an imbalance near a zone or liquidity near a zone is something that strengthens that zone and makes that zone more of a higher probability to work out than not to work out. So let's draw on some of the imbalance. So very clearly we have imbalance here, so that's one there. We have this one there as well. We probably have imbalance in here as well, but there's no point in me marking it out because I know that the zones are down here. We have, or had should I say, an imbalance here that got filled by this move over here, and then we have a very small imbalance there, which is worth noting, so I'm going to put that over there. And then as you can see, we've drawn out all our imbalances, and now we can see, you know, that okay, so not only do we have a zone here, we have some imbalance here and an imbalance here as well. So now it's time to draw on our liquidity. So clear liquidity there. We actually have liquidity here after the reaction with this zone, so that's worth noting as well. So let's put that on. And we have liquidity from this high here to this high here. So we actually have a large liquidity pool just there. So let me see if I can draw this on without it being too messy. Yeah, that looks pretty good. And there we go. So now we can see that we actually have resting liquidity above where price is at the moment, and we actually have resting liquidity below where price is, but we have more liquidity to the upside and less so to the downside. And so I think a lot of people get really stuck at this point and think, oh, we have liquidity to the upside, so price is going to take that first and then move down, which to be fair is actually not true. Price can do what it needs to do, but if we actually look at it in terms of imbalance now, we actually have more imbalance to the downside than we do to the upside. So which is it? Is price going to take liquidity first, or is it going to fill those imbalances? And essentially we are weighing up both scenarios and seeing what happens and then going by what happens essentially. And so I'll do an update to this video later on where I have everything drawn on again and then see what happens. But for now, we have gone over structure, zones, imbalance, and liquidity. And the final part to this video that we need to go over is the scenarios. So what can actually happen? What can we expect price to do? And what should we look for? So now, in my opinion, this is what I think will happen, is because if we look at where price is and what's happened so far, we've pushed to the upside, we've broken structure, we are in need of a pullback. That doesn't mean we have to pull back to these two zones here, but I do feel that we are in need of a pullback, and we can see that price is actually reacting to this supply zone over here. And the first reaction wasn't the best reaction, but if we look at the date of when we got that reaction, it was around 14th to the 15th of December, and we know, and we can actually clearly see that, you know, as we come into December, price action becomes slower, there's not much volume, and we get that choppy price action until January the 3rd, where we get a nice big bearish impulsive move to the downside. So now we know there is some volume in the market now compared to previously over here, and if price is rejecting this zone, it must mean that we should be coming down. So in my opinion, I do think what's going to happen is we're going to push down like so, and then we are either going to react from this demand zone or come down lower and react from this demand zone, and then we will target that liquidity to the upside like that. So we're going to come down, fill these imbalances, and then take that massive pool of resting liquidity to the upside. As traders, we have to be flexible. We can't marry a scenario, and we don't want to. So we can also have something like this. Because we have that liquidity here, we could expect something like this where we push up and then pull down and then move back up. Or we could have something like this where price just continues rallying up. And I think this rally up to the upside would be something that would form from more fundamental activity than anything else, because price needs to come back. In my opinion, we do need that pullback to these two zones. So that's something I would be looking for in and around these upcoming weeks. Okay, and so now the last thing I would be looking for. So now the last thing to look for, now that we understand the possible scenarios that could happen and the possible scenarios that I will be looking for myself, is this last thing, which is just looking at candlesticks, going back to the basics. So what is price doing in terms of candlesticks? So for example, after this big bearish move to the downside, obviously we had, you know, some imbalance in this move, so you'd expect some sort of move to come take that out. But since this price action here looks quite efficient, I do think price will continue to come down, and I will be looking at more bearish candlesticks to give me indications of the next day being bearish as well. So a good example of this is something like this, a candle like this, and then the next day being bearish, then the next day being bearish. Probably a better example will be 1, 2, and 3, and then once we get into an area where we think we can get a reaction, then looking for a reaction. And so that's what I'm expecting. So I'll be looking at bearish candles coming down into here, and then once we come into this area, looking for bullish candles in these two areas to basically give us a good indication that we're going down or going up. Same thing for these two zones as well. Are we going to get bearish candles or bullish candles in these zones? And then that's going to tell us where we're going to go anyway. And that's it for this video. Thanks for watching. Make sure to subscribe, give this video a like, and I'll see you in the next video.